Thanks so much for joining us, everyone. My name's Sarah. I'm going to be moderating this session tonight. I just wanted to let you know if you have any questions as we go along, please feel free to type them in the chat box. And if they're necessary for clarification as we go along, I'll read some of them out. And otherwise, we'll save them for a question and answer session at the end. So now I'm going to hand things over to our Executive Director, Bill Lougheed. Bill has been leading the Georgian Bay Land Trust conservation work for the past 8 years, and during that time, he has worked with a diverse array of landowners to conserve over 6,000 acres through conservation easements and land donations. And tonight, he's going to present us with an overview of how conserving your land can impact your taxes. So over to you, Bill.
So thank you for joining us this evening. Hopefully, we're going to have more participants. We had about 60 registrants, but I guess, Sarah, we should start, and if some people join late and they miss some of it, then we can do maybe catch up at the end of the presentation. So I'll just try to.
It's being recorded, so people can catch up that way.
Okay. Okay, so in my last talk, I covered more of the reasons, the conservation reasons for doing a conservation on Georgian Bay. It's a very special place, and hopefully most of you saw that talk. If you didn't, I would encourage you to go and check out the recording of that video. The link to it's on our website. Just a minute, I'm trying to minimize this stuff down below. So this talk is more focused on the dollars and cents reasons for people doing conservation. But I would remind everybody listening that really it's in return for conserving their natural heritage through conservation tools, including gifts of land or conservation easements, that you receive tax credits, and the reduction or elimination of capital gains, and the reduction of property tax on your property, if it's an easement, for example. So just a general qualifier, I'm not a CPA. This is not, presentation does not represent tax advice. It provides examples of hypothetical scenarios in conservation. However, this information is derived from a workup by CPAs, both from the United States and Canada. And some of this information is available on the Ontario Land Trust Alliance website in terms of if you're a US resident, and some of that information on the OLTA website will be applicable to you, and I'm covering some of that here tonight. So just some background about the Georgian Bay Land Trust. We are a qualifying organization on income tax with respect to receiving conservation properties, and we are registered eco-gift recipient. I talked a little bit about the eco-gifts program in my last talk. I'll just mention it again later on in this talk. So we can receive conservation gifts under the Ecological Gifts Program of Canada because we're qualified under that registration. And accordingly, GBLT can provide tax relief to Canadian and US donors in various forms. So a little bit about the Canadian Ecological Gifts Program. We work very closely with the Ontario chapter of this federal program, and it's the underpinnings of all we do in terms of providing tax relief to either American or Canadian donors of easements or lands. So you might be thinking, well, what is if you're wanting to save taxes, how does this apply to you? So there are a number of different scenarios, and you need, when you're thinking about your whole tax situation, you should not, in my opinion, consider your land, your cottage lands, or other lands on Georgian Bay. It could be your principal residence on Georgian Bay or in our eco district. You shouldn't consider that in isolation of your other tax concerns. And the reason for that is, one of the vehicles is to reduce, eliminate capital gains tax on perhaps on a let me back up again, start at the top here. Some of the desired tax benefits are to reduce income tax on Canadian income, reduce or eliminate Canadian capital gains on disposition of lands, eliminate or reduce estate taxes, make a gift that would not be subject to Canadian capital gains tax and receive a full tax credit that would reduce or eliminate capital gains on other Canadian source income or on other dispositions of property. So that's basically saying you can use a conservation vehicle to cover up some of your other issues with capital gains tax, or maybe you're in a high tax year and you want to reduce that really high tax burden. Maybe it's time to do a conservation easement on your property. So you need to look at where you are and, with respect to other things going on in your financial life when you're considering what I'm presenting here tonight. This is also a vehicle to reduce U.S. income tax or estate taxes. And you can do that through a U.S. charity. It's not a prescribed Donee. I'm sorry, part of this slide is cut off for some reason. And get capital gains elimination through eco gifts with our land trust. So that's sort of a combined effort with a U.S. charity. Or if you, if you make a use a U.S. charity that is a recognized prescribed Donee, which is a different thing, and that's the Nature Conservancy of Canada affiliate or American Friends of Canadian Land Trust. You can work with us and them, and you can then reduce income tax or state taxes, eliminate or reduce Canadian capital gains on a gift of land. You may also be considering buying a property at this point in time or in the future. And if you're buying a property, you can reduce your cost of that purchase by doing conservation easement on a portion of the land that you never intend to build on, if it's a large property or sizable property, or even sever off a portion of that land and donate that. Either method will reduce your cost of purchase, especially with increasing purchase prices for land. You can also reduce your capital gains and income tax burden when you sell your larger property by placing conservation easement on an unbuilt portion of your property before you sell, and using GBLT or a U.S. charity plus GBLT if you're a U.S. resident when you're doing that. You can also reduce estate taxes on land or offset other capital gains or offset other estate taxes by doing GBLT conservation easement. So for all of these vehicles, they are a means to eliminate capital gains on the value of the appraised value of the ecological gift and federal tax credit by approximately, or receive a federal tax credit by approximately 30% of their appraised value. And if you're an Ontario resident, Ontario tax credit based on the individual income. And when combined, these savings can amount to 75% of their value. I should also add that it's not just in Ontario. If you're from other provinces and you're a Canadian resident, those provincial rates also apply to that. Now, a few definitions before I get into some spreadsheets here that are somewhat complicated. We need to sort of coach you on some definitions. Adjusted cost base is the amount the owner paid for a property plus other acquisition costs and improvement costs, or the value in 1972 if you owned the property then. The Canadian tax credit is the amount that you can deduct from income tax you owe. It differs from a charitable deduction from income. It is cash in your pocket if you owe income tax. It's spreadable over 11 years if needed or wished. Capital gain, what is that? Some people don't really totally understand what capital gain is. It's the increase in netted value of the property. This means the proceeds earned on the sale or other disposition through a will or a gift or any other means of disposition, less the adjusted cost base, less the expenses incurred during the sale or other means of disposition, that should read. For our purposes here, Canadian qualified donees are those conservation organizations that Canadian Revenue recognized as able to issue tax receipts for receipt of property. And these are either land trusts or conservation authorities. A certificate of compliance applies to those individuals disposing of property, even if they're not disposing it for conservation purposes. You will need a certificate of compliance at some point in time when you dispose of property, or within 10 days of disposing of it. That's Canadian law. And if you get your certificate of compliance, which you can get through GBLT working with us, it ensures that capital gains issues are dealt with. Any non-resident should complete the T2062, which we help with, before disposing of property or risk withholding tax payable on capital gains. So CRA will know that you've sold a property if you're non-residents, and they will come after you, and it's much better to get this certificate of compliance before you proceed if you're a non-resident. Deemed disposition is a disposition of property other than a sale. Examples are transfer of ownerships to a corporation, a gift of a property, a bequest of a property, the list goes on, but it really is, it involves most transfers of properties other than your principal residence. Deemed proceeds of disposition is the fair market value at the time of disposition. The fair market value for the purposes of an ecological gift is an appraised value as determined by a full narrative appraisal by an AACI level appraiser. For purposes, the non-residents, our purposes here, a non-resident is any owner of Canadian property, regardless of citizenship, who does not reside for a minimum of 6 months in Canada. In a prescribed donee, U.S. taxpayers can donate an easement or land to a prescribed donee. That's or Regulation 3504, the Canadian Income Tax Act. Under Section 118 of the Income Tax Act, donation to prescribed donee allows capital gains elimination. You can also, as a non-resident, eliminate this through the GBLT process with ecological gifts. Either one works equally well. Gifting to a prescribed donee may allow income tax reductions for U.S. landowners if they don't have Canadian source income. So we're going to deal with it in the spreadsheet. So if you're a U.S. landowner, U.S. Canadian landowner, and you're thinking of disposing of land or through an easement or doing other conservation tools with us, if you need source income, you can go solely through us and get those tax deductions. If you don't have Canadian source income, then it'll become evident that you're financially much better off going through using GBLT plus a prescribed donee to do your conservation work. Any transfer of property by a Canadian resident or non-resident triggers capital gains. Gifts, sales, bequests, or transfer to a corporation or in a trust all trigger capital gains on appreciated land assets. You may become, or you will become a Canadian taxpayer when you dispose of land, and you must file a Canadian income tax return when you dispose of land regardless of residency. And the Ecological Gifts Program, the Income Tax Act, offer relief for you. U.S. taxpayers with Canadian income may deduct gifts to Canadian land trusts, including donations to lands or conservation easements on their U.S. tax return. So just stressing the capital gains issue because it is a big issue for many families, both Canadian and U.S. When they're, you're trying to cede your land to your offspring, and there are. It's a complicated issue, but I just want to go through some of the basic principles of capital gains. So let's have a scenario where your original purchase cost of your land was made 70 years ago, and you paid that, or 40 years ago, and you paid $10,000 for it. and you, over the years, you've put $100,000 into capital improvements. These capital improvements are only those improvements for structures on your property or other capital parts of your property. They're not going to include maintenance fees and other costs. And when you add the original purchase cost with the cost of capital improvements, you arrive at your adjusted cost base, which in this case is $110,000. And the fair market value is whatever the appraised value, AACI appraised market value is. And that means basically what you could sell your property for. And disposition expenses are any expenses that you incur when selling the property or disposing it to a conservation tool or gifting it otherwise or in a will, etc. So the capital gain on this hypothetical property is $1,840,000. So that is this adjusted cost base plus the disposition expenses subtracted from the fair market value, and that's how you get $1,840,000. So the capital gain exposed to tax in Canada is roughly 50% of that value. And the tax payable on the capital gain, now again, it depends on your tax situation, but a top marginal tax rate, that would be roughly half of that, $450,000. So capital gains is a big issue for properties that are increased in value in cottage country. And I think we're all faced with this problem going forward. So the example that I'm going to talk to, maybe Sarah, you can, or anybody, if you want to chime in with questions on that first part.
I don't see any questions in the chat at this point. If anyone would like to type one in, please go ahead. But otherwise, Bill, I think you can continue.
Okay, so the example that I'm going to run through next is a side-by-side comparison of the tax benefits to a Canadian or a US resident. So these tables are a little bit complicated, so I do anticipate questions going through this. It's not an easy read for anybody, I don't think. So this column here is the sort of item we're talking about in the other columns. This is the non-sale taxable disposition column. This is the taxable disposition of property after donation of conservation easement for a land trust. So this is just an example for an easement. However, if you prorate these up from 90% approximately up to 100%, the same thing would apply as if you were donating land. So the easement and this column is taxable disposition with donation to a US prescribed donee. So this column here applies to Canadian and US residents. This applies to US residents if you don't have sufficient Canadian sourced income to use this column. So this hypothetical scenario is appraised value of a property of $2 million. And the donor decides that, okay, they're just going to set up a small portion of the property to conserve the land, and the rest of it, that portion they're going to donate. So most of the property is being eased, going under conservation easement. It means it never can develop. So in this scenario, you might have a property that you could, as of right under the comprehensive zoning bylaw and under the official plan for your area, perhaps your property is divisible by 3 as of right, so you could sever off lots, and so those severed lots have high value. And this is a reasonable scenario where you could decide, okay, well, I don't want to see my property carved totally up and turn into subdivision. I want to conserve what I had, before I sell this property, or I want to just do, maybe I don't even want to sell it. Maybe I want to gift to my children, and I want to get away from all the heavy duty capital gains. So I'm going to make a good portion of my reserve property non-buildable. So this is a reasonable scenario with a large property worth $2 million where you're conserving lots that could be severed, and that's a reasonable value for that. So I'm having, just a minute, I have to get rid of this. I may have trouble with this full screen view here, but we'll see how it goes. So the disposition value, what's called the disposition value, is this $2 million value subtracted with the appraised value subtracted. So that's $200,000, 1.8 versus 2 million. And assuming closing costs, if you do an easement or other type of disposition of $80,000, so that would include any legal and a realtor fees. That may be a little bit high in this case. I'm not quite sure, but it's, you know, it will probably be on the high side. So the deemed disposition of the property is $200,000 in the case where U.S. or Canadian resident, and the adjusted cost base is the same for both. The capital gains, whether U.S. or Canadian, is the same, still applies to both. And the federal capital gains tax is the same for both. It is, you know, up to 33% of the federal tax, and then there's provincial tax that usually comes into play. It doesn't always come into play, but certainly if you're an Ontario resident, it will come into play. If you're a U.S. citizen and not an Ontario resident, it may not come into play. Then there's the Canadian federal surtax on top of that, which in this case would be $15,840. This is on the $200,000. If you hadn't done the easement on this property, this would be enormously higher, because it would be this rate, and we'll go back to this slide. This would apply to all of the $2 million value. And so would this apply to all the $2 million value. So when we look at this, the total Canadian taxes on this would be exposure to 139,000. Again, this Zoom stuff is getting in my way here. I apologize. The U.S. gift tax, you know, really only applies over here, sorry. But it's subtracted out if you're doing conservation work, so you don't need to worry about it. So the total Canadian U.S. tax should also be in this column over here. But again, these go away because you're doing conservation deals. So we move into what's going on here. I'm having trouble changing my slides here. I don't know why.
Bill, while you're doing that, we do have a question here from Leslie, wondering who pays the closing costs and legal fees that you mentioned.
That is, you know, that all depends on, you know, what the donor, the value of the donation is, and other things. So it also depends whether it's a nature fund grant. If it's a nature fund grant, then GVLT usually covers those costs. But the closing costs in this scenario of $60,000, I cautioned that was high. The normal, you know, closing costs for this are in around, for most deals, are in around, you know, $5,000 or $6,000. They're not anywhere close. And then there are their appraisal costs. So the closing costs are usually under $10,000. Well, now I'm able to change screens here. Are there any other questions? Does that satisfy the question?
Yeah, there's no other questions at this point.
Okay, So the charitable gift portion for Canadian tax is $330,000 on this scenario. And the important figures are down here at the bottom. And I think I'm going to have to change out of this mode. It's cutting the slide off. I'll see if I can work through it. Potential Canadian federal and provincial income tax savings on this scenario, if you had sufficient Canadian income tax to go through GBLT only, would be $954,000. And of course, that's spreadable over 11 years. So, if you have income tax payable for this $2 million scenario, if you had income tax of roughly $80,000 a year, then you could go through this route and get this full amount probably back in tax savings. If you don't have sufficient Canadian income tax, then you can go through this Donee route, which is either Nature Conservancy of Canada, Friends of Nature Conservancy of Canada, or American Friends of Canadian Land Trust, working with GBLT, and that's the tax savings you would get on this scenario going that route. And we work with those organizations, and GBLT becomes the, if it's an easement scenario, we monitor the property, so we have to strike a deal with them, and often we end up being the holder of the easement. We don't always end up being the holder, but either way, if we don't end up being the holder, then we need to charge American Friends a cost, because we'll be monitoring this in perpetuity. So, that's the cost for the land trust. So, I guess the scenario at the bottom is that there are great tax savings by either route, and it really depends. $954,000 on $1 million if you're paying a U.S. citizen or a Canadian citizen or resident, or if you're a U.S. resident or U.S. citizen, and you go the prescribed Donee route. So it applies to Canadians, it applies to Americans. So either route, very significant and quite comparable tax savings. So now I'm just going to go through a couple of other examples.
So we've got a couple questions here. Did you want to take a break for questions now, or keep going?
No, I think that's appropriate because it's kind of complicated.
Okay. There's two questions here about appraisal. So the first is, it seems to me that a lot depends on the appraised value of the property. Can you explain more about this process? What factors influence appraised value? And then there's a second similar question saying, it seems to me that most people would be putting less desirable land into the easement, keeping the valuable cottage land out of the eased land. In this scenario, doesn't that mean that the value of the conservation land would be considerably less than the property value in its combined state?
Okay, well, I'll take the last question first. Most cottage properties have shoreline, and shoreline is valuable. There's no question about that. So if you're wanting to not ease any of your, in this scenario that we're talking about easements, if you're not wanting to ease any of your shoreline at all whatsoever, then you're, number one, you're not going to be giving up any of your rights to build out, and you're not giving up any of your rights to sever the property. So down the road, you could sever it into 3 or 4 lots, because each of those lots is going to require water access usually. Sometimes it can be land access, but that gets, we don't have time here tonight to go into that complicated scenario. But so, usually in in many cottage scenarios, if you have a larger property, there are areas of the land that you don't use a lot, and an easement doesn't restrict you from using those lands. I mean, I think that's the important thing here, that just because you put majority of your property under conservation easement, it really, for the most part, means you're not putting structures on it, and you're not denuding the trees, and you're not denuding the landscape. It's really a, that's really what you should be considering. So it could be that you have a property that, is, you're using every bit and want to build on every bit that isn't wetland or forest. Well, in that case, you're right. But if you have a property where that you still want to use all of it, and there are areas that you really don't ever want to build on, then those are valuable. And they're not less valuable. So yes, wetlands are generally less desirable, and if you did a conservation easement on only a portion that had important ecological habitat at the shoreline, so you could never put a dock in there or anything else, then yeah, that's not going to be of much value. You're right in that one scenario. In terms of what an appraiser considers, appraiser asks the question, what rights are you giving up? So if you, as of right, under your official plan or your comprehensive zoning bylaw, have the right to sever your land into multiple lots, each of those lots is very valuable. If you have a shoreline that you're wanting never to put a gazebo on, you can still put docks on conservation easement or shoreline, but if you're wanting never to put a deck or build out on that near shoreline, then the appraiser, that's very highly valuable. Anything that's protected on the shoreline. The appraiser considers other comparable sales, so that if you're in a highly desirable area, then those sales next door or close by are going to affect the value of you doing an easement on your property. And so I guess those are the things that affect the appraised value. And I would point out that the appraised value is not the resale value. There are many properties that have been sold in the United States as a better example, but there are properties in Canada where large land, where there's a easement on them, and this has actually increased rather than decreased the price of the appraised value, the price of the resale price of the property, but it hasn't decreased the appraised value, ecological appraised value. So any additional questions on that, or have I answered that sufficiently?
There's another question here. If an American sets up a conservation easement and then bequeaths his island to his kids, is the value of his estate reduced by the value of the conservation easement for US tax purposes?
Absolutely, if you follow what I presented here. So you don't have to have Canadian source income. If you do, you can do it all with GBLT. If you don't, then you can go through GBLT to eliminate the capital gains portion of that, because that value of the easement comes off the capital gains. You can simply just go through us if you're just worried about capital gains. But if you're also wanting the tax reduction in income tax payable in the US, if you want further financial advantage, then you need to work with us and one of the prescribed donees. So this scenario absolutely applies, very applicable to succession and gifting the property or transferring the property to your offspring.
All right, great. Just one more question at this point is just someone wanting clarification about whether landowners can drive an ATV on conservation easements.
Well, it really depends on the scenario. If it's a large tract of land and you know, and there are other you know, there's sufficient constraints. I guess the answer to that question is yes, but it depends. And certainly that has been allowed as long as you're not putting down hard substrate. If you're putting down gravel and other things and building a road on it, then that portion would be excluded from the easement. But easements are nuanced, so you can exclude that area where the ATV trail is going to be, and it doesn't become part of the easement.
All right, thanks, Bill. That's all the questions we have right now.
So the second example here is, you know, just to sort of compare, you know, what happens if you do a conservation easement versus the sale of a property. And so this is, you know, a hypothetical sale where the proceeds of sale are at $1 million, and the original cost of the property was $100,000. And the capital gain on the sale of the property is therefore $900,000, and taxable capital gain on that $450,000, and the tax on capital gain and marginal tax rates $237,000. So roughly half of that, a little bit over half of that. And this would be an individual not in the very top tax bracket, but in upper regions of Canadian tax bracket, making $150,000 a year over the course of 11 years. So that's just the, if this person were to spread this tax credit over, or if spread this, the disposition over 11 years, you'd be looking at a income of $1,650,000. And the tax on that in the first year would be $47,000, and the remaining 10 years, $477,000. So the total tax on employment income and capital gains would be $763,000. And the net after-tax cash realized on that sale would be $1,886,000. So if the individual were to put an easement on part of this, valued at $850,000, and the deemed cost of that disposition was cost of the easement was $85,000. The capital gain is then $765,000. The marginal tax rates, this all remains the same here. The reduction in due to the tax donation tax credits through Ecological Gifts Program of Canada, or $45,000 in the first year, $376,000 in this scenario over subsequent years. And bear in mind that you could do this only year one if you wanted. You could do this over 11 years. It depends on your income. Carrying it over 11 years, it's, you know, if you're not in the tax bracket, highest tax bracket, usually, you know, this makes the most sense. The total tax on employment income is then $103,000. So the net tax after tax cash realized is $1,546,000. So if we proceed on to looking at the comparison of these two, the sale versus the easement, one is still realizing more money if you sold it, but with the conservation easement on it, you know, it is pretty considerably comparable, and one is still holding on to your property in this scenario. So versus having to sell it, or even if you decided to sell it and you were wanting to see the place that you knew and loved really conserved so it didn't get built out on, then, you know, it's still comparable as long as it's a big enough property that the conservation easement's not impacting the resale value. So I think that I have other examples, but I think this sort of gives you a taste of things. If you were to compare the same scenario with sale versus the donation of land, then the values are closer. If you compare a partial sale versus partial easement, the two scenarios are very close. So this is just sort of reminding you that there's great tax advantages, whether you're U.S. or Canadian citizen, in using these tools, and there's advantages these two tools apply and are advantageous if you're procuring a property that's large enough that you can decide, okay, well, I don't want to sever off 2 lots from this larger property. I don't want to turn it into 1 acre lots. I want to be a conservationist. And this is going to help me out. These tax advantages are going to help me out enormously in terms of buying a very expensive property. So, and I'll get to enjoy all of it if I do an easement. So, so I guess, some of the advantages are keep the cottage in the family by reducing capital gains when passing the property on to your heirs. It applies to Canadians and Americans. Leave a legacy of wilderness for your children's children. And all of these tools, whether it's gifting a land or doing an easement in perpetuity, the legacy for biodiversity on this special coast of ours is forever. So here are the steps in protecting your wilderness property. I guess contact me and talk to me. We will do inventory of the flora and fauna on your property. And we use a conservation-based conservation plan and inventories to assess the ecological value of the property and write a case for conservation. And we take you right from start to finish through the ecological gifts program. Or if you're a US, we take citizen or resident, we take you through the ecological process plus through the process with the prescribed Donee, or the process through the T2062 certificate compliance if you're just working with us. So we hold your hand through the whole procedure, start to finish. So this talk was sponsored by the Ontario Children Foundation. We have a 3-year grant to accelerate conservation on the coast from the Children Foundation. We're grateful for their support in this. So with that, I'll stop and take questions.
Right, thanks, Bill. There's a question from David about how long it takes to do a conservation easement, both in terms of working with the Georgian Bay Land Trust and then working with the government.
Through 2 months. If the project's not coming in the fall, if it's coming in before spring or at springtime, then it's much more beneficial, and we can go out and do inventories. And that window is usually 5 or 6 months. It can be short as 4 months in some cases. If you come to us after September, we often can't find species at risk of the property and it becomes a problem. And then you're probably looking, if you start in October, you're probably not looking to complete it until August of the following year. So, but usually 6 months is the average window for it.
All right, and Tanya's wondering if there's a cost for our services.
Well, usually we ask the donors to pay the costs on their side. So their appraisal costs, they can do that through donating to us. So there's a bit of a tax break there on the conservation, appraisal, and the legal costs on the other side. And these are, we usually expect the landowner to, if the landowner is getting a $200,000, $300,000 or $400,000 tax benefit, we usually expect the landowner to pay the legal costs of $1,500 if you don't use a Toronto lawyer, and their appraisal costs, which are, you know, usually in around $4,000 to $5,000. They are expensive, but they're well worth it. And, you know, we can get you a tax break on that appraisal if you donate that $4,000 or $5,000 to us. So, you know, the costs, so all in all, your costs will be under $5,000, more usually in around $3,000. So it's not, if you're getting a huge tax break, it's not really much we feel to ask, and we need to keep our lights on here, so, and pay our staff. So,
All right. Tom's wondering, can the appraised value be higher than the market value? Do you know of any instances of this? And is the appraised value generally higher than the MPAC assessed value?
the appraised value can be higher than the market value because the appraiser is looking at, especially in those instances where the property is subdividable, because and same with impact, because impact doesn't take those things into consideration. Whereas if you're talking about ecological gift, it is taken into consideration.
All right, great. Those are all the questions. Does anyone else have a question? We can also allow people to unmute if you want to raise your hand and ask a question verbally. We can do that as well. Okay, question, do we service areas in Parry Sound and Magnetawan?
Yes, we do. We cover the whole area between Port Severn, from the coast of Georgian Bay into the Trans-Canada Highway, and from the south from Port Severn all the way to Blind River.
Okay, it looks like that's all the questions we have. So thank you very much, everyone, for coming. Thank you, Bill, for a great presentation. This has been recorded, and we will send it out to you by email if there's anything, if you didn't get the whole presentation or you'd like to rewatch it. So look for that probably in the next couple of days.
You know, I would add before we close is that I'm always available for questions, because a lot of this is pretty nuanced and, you know, really depends on the property. And I wouldn't expect anybody listening to this tonight to, well, some of you, maybe Sandy Boyd, will have picked all of this up and in one go and know everything about it. I'm not sure, but it's not it's not intuitive. So phone me or email me if you have any questions.
We'll include Bill's contact information in the follow-up email to you, so you can do that. All right, thanks everyone. We'll end the meeting now. Have a great evening. Bye-bye.
Thanks everybody. Bye.